All right, from voices and views, let's take it across to our expert panel that's joining us right here, because NPA is a big issue as far as Indian economy is concerned, and a resolution in NPAs will mean that investment can be crowded in and growth perhaps will pick up. Thanks each one of you for being with us. We are joined by our consulting editors Mythili, Bhusnurmath and Swaminathan Aiyar. It's also a pleasure to welcome DK Mittal, former banking secretary in the government of India, Vinayak Bahuguna, CEO and MD ARCIL, and of course Mr. Piyush Joshi, partner Clarus Law Associates, very deeply involved with this NPA resolution as well. Thanks very much each one of you for being with us. And Mythili, I'm going to get you to kickstart this whole process. I mean, you know, the top billing that we're giving this programming is not just for semantics. I mean, NPA is such a huge issue, and many people believe that the present mechanisms are not enough to resolve this mess. Are you someone who shares that concern? Are you someone who subscribes to that view?
Well, yes, certainly the present mechanisms we have are certainly inadequate. But I think before we start the discussion, Supriya, it's very important to understand two basic factors. One is that NPAs are part and parcel of the banking business. Banking is about the business of managing risks, and you will never have a banking system with zero NPAs. Nor will you have any country anywhere in the world, particularly a capitalist kind of country, free market economy, which has never experienced a banking crisis. So banking crises also are not unique to India. But what is unique to India is our inability, so it would seem, to learn from experience. So if we had a huge pile of NPAs in the late 1990s, we are again having this situation today. And if we address NPAs the way we are doing it today, I'm afraid that a few years down the line, we'll have exactly the same situation. And that is very similar to what we've done in the power sector, where we've had bailouts not just once, not just twice, but there is a third bailout. So unless we address the underlying cause rather than the symptom of the disease, I'm afraid we're not going to get anywhere. Unfortunately, I think the way government is tackling the NPA crisis is they're looking at what to do about the stock of NPAs and completely ignoring the fact that you will continue to have fresh NPAs unless you address the issue of how do banks function on commercial principles at arm's length distance from government, and how do you remove the impediments in the legal system. Piyush, of course, will tell you what needs to be done in the legal system. But if you go to court, that's the end of the matter. Cases drag on for virtually forever, and you never get a resolution. By the time you get a resolution, the assets are worth nothing. So I think you need to address this entire issue on a much more holistic level, not only the stock, but also the flow.
Okay, indeed. But Swami, if I may throw this to you, our NPAs have ballooned to 7 lakh crore rupees. Mythili is right in pointing out that a part of the problem is that we're perhaps just attacking the stock of NPAs, but not really tackling the root cause of what fuels these NPAs, what turns a loan into a toxic or a bad asset. But isn't the government in a bit of a bind here of sorts, that unless you don't attack the stock, you can't in any case make much progress?
Well, there are a very large number of problems, as the earlier speakers have highlighted. I think the point that Subir Gokaran made is critical. In most countries, banks are not the ones financing infrastructure. In India, we told the banks you must go and finance infrastructure. Banks are not really designed to do 20-year projects. And yet you went and did it, hoping that somehow they will be able to get rid of these particular loans. Now, that particular problem has not been overcome. Okay, you know right now that that is not working out. It was a mistake. But if you say, okay, it was a mistake, what are we doing from now on? Do we have a sufficiently large bond market? Do we have a sufficiently large non-banking finance available for all our infrastructure? It seems to me we don't. So, there's a more fundamental thing that if we need infrastructure, and if you are going to build infrastructure, how is that going to be built if you don't bring the banks in? So, that's a very, very fundamental. So, when you say learn from the lesson, you can say, okay, learn from the lessons. Banks go back to the provision of working capital. They don't get into these long gestation projects as in the past, right? That would be a lesson for the future. But then the question is, if not banks, where is the finance going to come from? And it's not clear to me at all.
Valid point indeed. If not banks, where is the finance going to come from? And one is at sea to find that out. DK Mittal, who should be footing the bill? Where should the finance come from? When should the government say, I am not going to pump in any more money because this is taxpayers' money? I know there are cases where loans have turned into NPAs because there were issues beyond the control of promoters, but there are very many where there is malafide that can be established. So my larger question to you really is, where does the government, which is the majority shareholder of most of these public sector banks saddled with bank loans, draw the line?
I'll start with what Mythili has said, and that's a very fundamental question. Why do we have this flow coming regularly to the NPA category again and again? And there are very fundamental reasons the way banking system is supposed to be delivering credit to projects. What Mr. Swaminathan has said, that's a very fundamental point again. But the question is that banks have never been asked to behave that way. So there is no pressure on banks to offload a loan. Joint lending system does not work in India. Underfinancing is a common thing. So I think you have all these issues related. And you know, India is one of the highly leveraged markets in terms of the large corporates which are having a problem today. The leverage is as good as 15 times. So no country supports banking leverage of that extent, but it has happened. It is happening. It has happened in the past. It is happening now. But ultimately, when the responsibility comes, it comes to the government, because the shareholder or the largest shareholder is the government. And ultimately, they have to be responsible for running the economy also. So the problem remains that the flow is never being checked, and the fundamental issues which are causing the flow need to be addressed. And secondly, the present crisis need to be addressed. For that, the government will have to come out with some innovative solutions which are available. And there doesn't seem to be any way out except to get these solutions in place, on all the possible solutions in place. Now, the larger issue of infrastructure financing has to be looked at from global experience. And we must bring those global experiences which are available to Indian market, which needs a close working of the RBI and the SEBI together. And also the IRDA, because this insurance money is something which needs to be flowing there.
Mr. Vinayak Bahuguna, who's the CEO and MD of ARCIL as well. Mr. Bahuguna, you know, I think Mythili makes points out one part of the problem. Swami points out the other. And Mr. Mittal is right that I think stakeholders have to together be involved in finding that resolution. How much of these two views or three views do you agree with? And would you like to add on a fourth view there before I can take it to the legal opinion on the channel, and then, of course, get the discussion going?
Yeah, thanks. I don't know whether I have a fourth view, but I largely agree with the number of points made by Mythili and Swaminathan Aiyar and then Mr. Mittal. But, you know, a few points, if I might add to this, is one, I believe the time has come when, as in most capitalist markets, capital should be made available where decisions can be taken. So, and we've realized over the past that decision making is being stymied for one reason or another, and bankers have felt stifled to take some hard economic calls. I think that must change, and I think that's what we expect to come out of the recent deliberations between Reserve Bank and the government. The second point, and I'm not focusing so much about the flow and the skill building and what you should touch and not touch, but the more immediate the aspects of corporate restructurings which involve an impact on the corporate on one side and banks on the other side. I think it is quite obvious from past experiences, including the abysmal record of CDR, that where banks try and fit into shoes which are too small, some restructuring schemes, these don't seem to work. And the immediate fallout of this is prolonged recoveries, which also involve a cost. The increased risk of failures continue to be associated with such restructurings. These are all non-earning accounts. So the current cost to the system could be anywhere upwards of 40,000 crores a year. And leads also to long periods of depressed equity markets. So I believe the risk we run now of inaction is a very long period of the banking system not being able to support future investments and growth, and that's what needs to be addressed. This involves a couple of points. Recapitalization. One is losses at the company corporate level, which could be borne by the owners as well as the banks to a certain extent, and hope some of this could be recouped over time. And the second aspect being what happens at the bank level itself when these losses get crystallized, and who needs to sort of fill the bucket here. And I'm afraid the time for that might run out faster than we think. With the advent of the IBC, it is more than likely that many of these cases actually end up in that NCLT forums, where decisions will have to be taken, and we will have to take some very hard calls, because it does provide an opportunity. It does provide an opportunity to restructure with a resolution professional independently working on it, and the NCLT providing a stamp of approval, so to speak. And that might attract international capital, because they look at legal environment, they look at pricing as entry points. I think for far too long we've tried to carry assets at unsustainable values, and that must change. And I hope part of the deliberations and the policy measures that the government takes addresses these issues.
You just hold your thoughts there, because I'm going to get in the legal voice and the legal perspective in this entire discussion as well. And Piyush Joshi, if I may throw this one at you, Mr. Bahuguna was pointing out how top money can come in if because there is always legal recourse that's available. But is there enough ring fencing for some of these bankers to make the decisions, whether it's haircuts, whether it's restructuring? Because a lot of people believe the part of the problem is that these decisions are discretionary in nature. They're subjective. It can be questioned a few years later, and which is why people are not making that decision.
That is correct. That would be one part of the problem. But a larger part of the issue is the nature of the underlying assets. If we just look at infrastructure, which was highlighted, the nature of the asset, a bank cannot do anything with respect to an infrastructure asset. They have to find ways of restructuring it and putting it to another management or the same management under a different study or restructured entity. The whole issue, for example, if we look at the stranded power projects in the gas sector, is that you don't have any, if you don't have gas flowing into the gas power plants, there's nothing that the bank can do, there's nothing that the promoter can do. The only issue then is, does one just go to the courts, which are overburdened and are not capable of handling large contracts or complex contracts just because there's no time before the court? And second, during the time period, what is happening is the NPA will just keep on building in that particular sector. So the whole idea, at least for infrastructure, would be, and what is really required, is a framework to completely deal and segregate infrastructure assets as assets which are required for the nation, assets whose functioning is necessary, and they have to be financed separately. They have to be dealt with under a dispute mechanism separately. As long as they are not treated as a specific class of assets, which they are, no banker under any policy framework will be able to take a decision that, yes, I will now enforce my mortgage and put this asset with the bank, because a bank cannot run it. Bank has to find another promoter. There is no market for another promoter in a particular sector. And then it becomes like a show of, oh, there was connivance. When there may not be any connivance, because the banker has no choice. Either he's sitting with the bad loan, or he has an underlying asset which he cannot move.
Fair point indeed. Mr. Mittal, before I throw this to Mythili, I'm tempted to ask you this question. Is it a price that bankers are perhaps paying, or the economy as a whole is paying, for the institutional activism that we saw a couple of years back? You could be hauled up by the CAG, the CVC, all kinds of, queries could be sent to you. Is this a result of that? I mean, why are banks wary of making this call? It's an asset that has gone bad. Why not sit across the table with the promoters, decide on the haircut, restructure that loan, and get going? That's exactly what is not happening. But is it not happening because lenders primarily are very wary of taking those decisions?
Yes, there are two aspects. One is, you very rightly said, they are very wary. because there has not been very good experience in the past of bankers disposing of assets with all sincerity. They have been questioned, particularly by the vigilance agencies, and perhaps they do not have that much understanding of commercial decisions which are taken by banks. So that is an issue, and efforts were made, but it did not succeed to see that whether good bankers can be sort of protected from their good decisions being taken in this aspect. So that is an issue, and that continues to be an issue.
But Mr. Mittal, we had a perfectly good system, quote unquote, for infrastructure financing in this country. We did have term lending institutions, and the fact is that the government and the RBI took a conscious decision to end term lending institutions, partly because two of the big term lenders, both ICICI and IDBI, got into trouble virtually, which was never declared. So ICICI was allowed to convert itself into a bank to escape the problem of the thrust of NPAs, and IDBI was allowed to do it much later. So the problem really is that we had a system with its flaws. The government and the RBI consciously decided to do away with it, and they told banks to lend, knowing very well that they would have an asset liability mismatch. And the fact is that all over the world, infrastructure has never been built entirely by private finance. The government has always had to play a big role in infrastructure finance. So why do we in India think that we can do it differently? Mr. Mittal?
I agree with you, but kindly recall in 2000 or the later part of 90 decades, the financing of infrastructure was very minuscule amount. Today the financing is of gigantic scale. So that's one part. Secondly, while we moved to a direction where the banks could come as the first lender, the idea was should not have been that the liability remains on the asset remains on the balance sheet forever. They should have been disposed of, and they should have been forced to dispose it off by creating alternate markets. No, the all initiatives stopped there only. It did not go beyond that. Because if it was pushed beyond that, then what you are saying is very rightly, those institutions arrangement would have come up in the market. So since there is no urgency for me, if you talk to a banker, he says, I lent out this money when the risk was very high. Now there is no risk, the project is doing well, then why should I have this asset disposed of? But that's a very bad way of looking at the way the banking is. So the question is, there is a regulatory gap, let us admit it out, that we did not push the bank to say that, dear sir, this asset will remain only for this much time with you. And if you are being compelled to do that, then the alternate market will have to be in place, because the banker will say, where do I dispose of? So therefore there has to be a market, and the market will say there is a product coming, so I need to fund it out. So I think there is a vacuum in the third stage, the second stage, how the assets have to be disposed of. But let me say one point, the joint lending system does not work in India, and that is one of the biggest causes of these NPAs, where the overruns happen. With the sincere projects you have overruns happening, under financing happen. So, and also the quality of lending will improve if there is an arrangement to downsell, which happens globally. That for 90 days you have the asset on your balance sheet, and within 90 days you have to bring down your exposure to 20% of that. Therefore, you are simultaneously getting your project assessed by other borrowers who will be lending money to this project, and that improves the quality of the the lending arrangement. So I think that's another area which is a big piece missing in India.
Mythili, I'm going to throw this question to you, and then you can carry the discussion forward, Mr. Bahuguna, as well. We were just having this chat before we walked into the studios. JLF, the Joint Lending Forum, not working in India. You would much rather go back to the consortium idea?
Well, absolutely, because it will not, well, I'll say about 10, 15 years ago, the RBI used to insist that on all loans beyond a certain amount, it had to be a consortium. Now, a consortium is a formal legal documentation which requires all the lenders to share both the exposures as well as the assets, the securities pari passu. That means no lender is allowed to take independent decisions without the consortium agreeing to it. Somewhere on the line, about 10 years ago, the Reserve Bank of India, for reasons best known to itself, said, okay, fine, we won't insist on consortium, you can go in for multiple lending. In multiple lending, this entire discipline of the consortium breaks down. Each banker does exactly what he or she pleases, but the securities are charged separately. There is no common responsibility. And that, I think, was one of the fundamental reasons why this Joint Lenders Forum, however fancily you may call it, broke down. Another reason was that RBI, soon after the financial crisis broke, and then we did have the issue of a slowdown in the economy, the RBI encouraged banks to lend to infrastructure by doing away with the exposure limits. Exposure limits were raised, and banks were asked to lent to infrastructure, not just by the Reserve Bank of India, but also by the former finance minister. And of course, this did have the plus that the economy did not go into a tailspin, and the economic growth, in fact, continued for 1 or 2 years after the global financial crisis. So there is a plus and a minus to everything. One can't see things in black and white. Yes, banks lend to infrastructure when they shouldn't. And the issue, as Mr. Mittal said, that after 5 years they were expected to get rid of the assets from their balance sheet. The question is, to whom would they get rid of it? As Piyush said, if you are not going to have gas for the power plant, you're not going to have coal because the coal auctions were held to be illegal, then what is a banker to do? So it's a combination of factors. And I think to look at this only as an issue of banks or only as unique to India is a mistake. Because remember, the US also had not just the Resolution Trust Company, they also had the TARP. So all over the world, there are n number of examples where ultimately taxpayer money does get used to bail out the banks. And the idea is that the larger externality of having the economy start moving again is perhaps worth it. But Mr. Bahuguna, would you agree with that assessment that somehow NPAs and banking crisis are built into free market economies? And the question is, how do you ensure that there is both accountability and responsibility, not only of the lenders, but also of the borrowers? Mr. Bahuguna?
Yeah, I think from my perspective, the fact that this is part of a capitalist system, there will be bubbles, there will be optimism, there will be froth at different points in time, which might lead to mistakes. We have to get back to some sense of a very down-to-earth, common sense approach to lending. And how much risk we can take and how much risk we should offlay balance sheets. That's one side of it. The other side is that what are the documented processes and the agreements with counterparties, the borrowers involved. I think that becomes critical as well. The IBC framework, I believe, provides sufficient mechanism for people to get together and agree something that will work for all parties. There have to be incentives as well as disincentives in the overall structure. But just coming back to two fundamental points, I want to reiterate again. One is trying to find solutions for the underlying corporates, and where those solutions do not exist. For example, the failed gas-based power projects, I'm afraid that money just needs to be written off and people need to move on. At least in the interim and the medium term. But who will fill that? And if banks are going to take part of that burden, as I'm sure they'll have to, because there doesn't seem to be any further upside at the moment, then that immediately brings down to the second most critical point, which has not been spoken about enough in terms of the recapitalization of these banks and what is the sort of money required, and whether our government has that ability, and if not, how do we create this ability through some innovative structures and raise that capital? Because otherwise, without recapitalization, these banks will become quite toothless over the emerging years, and I'm not too sure how quickly the private sector can step in and fill those shoes.
Those are big and very, very big shoes for the private sector to fill in, and I think the public sector will have to continue to be the engine there. But Swami, I want to get down to specifics and exactly what we are picking up at this stage. We're given to understand that the Union Cabinet will perhaps take a call on giving more teeth to the Oversight Committee. Oversight Committee is nothing, and just for the benefit of viewers to explain, it's an external body of sorts. Right now it has people like Pradeep Kumar and Janki Vallabh, the former CVC and the former SBI chair. They will help banks decide on how much haircut to take, what sort of restructuring to do. We're given to understand that there could be legislative backing, a legislative cushion that may come for this Oversight Committee. More people could be nominated with experience in central banking, with perhaps some legal parlance as well. Do you believe that's going to be an exercise in fertility? Is this going to help at all? An Oversight Committee that is going to be more proactive, more empowered with the legislative banking to kind of help decide on some of these discretionary issues?
Yes, it may fail. There is a fundamental political issue that politicians are seen by the public as being corrupt. that they raise enormous sums from various guys and they must be getting something in return, right? So this the suspicion is there. In some cases warranted, in some cases not warranted at all. So because of the problem of suspicion, we have the impasse right now that a huge haircuts need to be given. Those haircuts will in effect be interpreted by opposition parties as you have put tens of thousands of crores, hundreds of thousands of crores in the pockets of this baniya, of that Sethji, of this particular industrialist. Now, merely by saying that I have something called an oversight committee and I have some legislation attached to it, can you reach a situation where you go ahead and say, okay, now these are going to be completely non-corrupt things that have nothing to do with any Sethji or any Baniya having bribed any particular political entity? Can you get to that situation? I mean, frankly, this is a political problem and not a technocratic one. Can it be overcome? They're going to give it a shot. So if you have an oversight committee, if there is a separate law, maybe you say that now there are a sufficient number of layers, and when the decision is taken, you can't say the fellow just gave a little bit of money and got the clearance. Maybe. But I would say the opposition might go out of its way to in fact insist that these are still corrupt deals. If you're going to try to pass this particular kind of bill in Parliament, the opposition may get up and kick up a huge fuss and say, look, this is a bill that you are doing to try and get away with putting tens and hundreds of thousands of crores in the pockets of various undeserving cronies. So I said, there is a whole lot of potential problems, even in the proposed solutions.
All right, that's an important point indeed, and I think that's exactly why the government wants that parliamentary cushion or that legislative cushion, so that the opposition tomorrow doesn't point fingers and doesn't raise issues of crony capitalism. But Mr. Mittal, you have experience in policy making. Do you believe people who are involved with decision making like this, whether it's the top officials of banks or whether it's the members of this oversight committee and perhaps new members who are going to be added on to this, they will draw comfort from the fact that the parliament has given an approval to something like this? This is information that we're picking up from top sources in the Ministry of Finance and in the Prime Minister's office. This is information that is perhaps going to be discussed and debated upon in today's cabinet. It's still not official, but we're given to understand that that's going to be the broad contour of what this NPA resolution mechanism could be. A more empowered oversight committee, one that will perhaps have some kind of legislative backing. Do you believe that kind of assurance is always helpful to make a decision like this? Mr. Mittal? Okay, I think there's a problem with that line. I want you to, I want you to take that question, Mythili, because what Swami is saying is that, and I think that perception is right. The perception is that politicians are a dishonest lot. There must have been an underhand dealing. There must have been a sweetheart deal, and which is why perhaps the government of the day, and they've been wary of what happened with CAG and other institutional activism like that. Do you believe this kind of legislative assurance will help things be decided in the first place?
Swami said it's a political sweetener, but I have a more fundamental objection. The idea of an oversight committee is to try and provide a bureaucratic solution to basically a business, commercial, technical issue. Lending is a technical issue which only bankers are competent to do. The idea that a former bureaucrat or that a former State Bank of India chairman, who perhaps, I think, if I recall right, he was chairman about 4 or 5 chairmans back, because we had Arundhati, then we had Mr. Pradeep Chaudhary, then O.P. Bhatt, then Purwar. So Mr. Janki Vallabh, of course, a very respected name in banking. But the fact is that only the lending bankers themselves will know exactly where the shoe pinches. So this should be a decision that is left to the commercial interest in business, knowledge and informed decision making of the banks concerned. To assume that some bureaucratic body would have a better idea is only to make it politically acceptable. It will be a disaster, and the basic problem really is to allow banks to function on commercial lines. Until we do that, I think we're never going to have an answer. It just may sound politically acceptable. And one more point, Supriya, that I wish to make. I think everybody talks about recapitalization of banks, but let's be very clear. No bank lends out of its capital. Banks lend from their deposits, which is why banks are so different and which why puts them in a different category altogether. So except for the fact that you need capital to satisfy Basel, and by and large most of our public sector banks do meet the Basel requirements, the fact is that banks could still lend from their deposits. If they are not lending today, it's mainly because they are so petrified of lending. Why would you want to lend when you never know what's going to happen tomorrow? Any decision taken with bona fide, completely bona fide decision could go wrong, and tomorrow you could find yourself behind bars, as some senior bankers have been. So why lend? It's better in the public sector to do nothing than to do something and then be penalized for something that is not your fault. This is not to say that there may have been malafide intent in some. This is not to say that decisions were taken without proper due diligence. The point is that it's wrong to tar everybody and everything with the same brush, Supriya.
But Mythili, you know, I agree with some of what you're saying, and I choose to disagree with some of it, and I'll tell you why. What you're saying is perhaps the right thing to do. Banks should be allowed to do and make commercial decisions, stick by them, be answerable for them. But that's very, very utopian. Piyush Joshi, if I may bring you into this discussion, don't you believe, and I think what Mythili is perhaps saying is that if banks are allowed to function as commercial entities, this need of an oversight committee will not arise at all. But the fact of the matter is that these commercial entities are not making the decisions that will take care of those NPAs. They're not making decisions on haircuts, they're not making decisions on restructuring, even within the mandate prescribed by the RBI, and which is why some kind of an external assurance is required. I think the kind of suspicion that any settlement is seen with is one of the reasons why this kind of assurance is perhaps warranted, and policymakers want to get this in. And much to our annoyance, I know this is not the best thing to do, but much to people's annoyance, do you believe we'll have to do this? This is something that is unavoidable.
See, without looking at the contours of the legislative backup that is being built in for the oversight committee, it is very difficult to give an opinion on it. But the fact is that just having a statute which puts in place another committee which is empowered to take a specific decision will not insulate it from questions. It will not insulate it from a PIL randomly coming into the judicial system and making its way up into the courts, and you ending up with a judgment which you cannot predict or you have no control over, and impacting an infrastructure asset or impacting a series of decisions and setting the clock back. So without a specific legislature has to take a step to say, this is the mandate of the judicial bodies, this is the mandate that is needed, because for a very long time now, it has gone into a situation where, at least for an infrastructure project, it is just impossible to predict exactly what is its project cost. For example, one thermal power project starts, its project cost is, say, 1,000–1,500 crores. 3 years into its construction, a PIL gets filed and an additional cost of 800 crores is added to install additional environment equipment which are essentially over-engineering for the environment that is there. But because someone read it somewhere in the US, Napa Valley or some other Utah Valley, it's got to be put in India because India is supposed to have the best and it can't be like the Chinese. But we are so far behind the Chinese in infrastructure that nobody is really realizing anything, that unless you develop your infrastructure and get on with it, it is really a question of how far away will we be, will we be able to handle another influx of 1 billion people looking for employment and cities with the infrastructure which is crumbling.
Piyush, as you talked about, infrastructure and the power sector, etc. It's also true that in the case of road projects, you have had so many cases where state governments intervene and say, no toll will be charged for this. Now, which private financier, which banker will be able to lend for a road project if somewhere halfway down the line the government decides for whatever political reasons that no toll will be charged? So I think in India, infrastructure is so completely part of the political economy process that until and unless government accepts, and the people also at large accept, that there is no free lunch in every literal sense of the word, infrastructure cannot be financed.
But that's the larger philosophical question, and I wish our politicians and we as people also had answers to that, Mythili. I agree with you there, but I don't think immediate answers are available. And so I'm going to take this back to Mr. Mittal, because I began by asking you that question, sir. The Oversight Committee, both Swami and Mythili and Mr. Piyush Joshi have had a view on this. I want to ask you, you've been a part of decision-making. Decision-making is looked at with such suspicion right now. If you restructure a loan, there's got to be a sweet deal. If you do not restructure, then there's this policy inertia. How do you resolve that issue? And I think the government of the day perhaps realizes that there is so much of institutional activism that one has seen. It's best to have an oversight committee. Mythili believes, and rightly so, that why should you have a ex-bureaucrat committee or an ex-expert committee outside of the commercial decisions that should be taken by banks alone? Where do you stand on this? Do you believe that legislative assurance will make things easier, with help banks to decide on some of the issues?
You see, I'm afraid the size of the problem is so big that no committee can handle it on its own. Secondly, they will never have protection from the investigation by CBI or by CVC. They will always be exposed to that. Parliament is never going to agree to that. Now, if that is the case, how this committee, which is 3-member or 10-member or whomsoever they may be, is going to deal with them? And what is going to be the role of the boards? So ultimately, the issue need to be, I'll agree with Mythili, that it has to be handled by the boards. Now, let me say one more point. The projects which are NPAs are two categories broadly. One, which are otherwise good, but because of the cyclic nature of the economy, today they are not able to make money. Second category projects are those which are fundamentally wrong, fundamentally bad, and therefore they have to be dealt with. Now, in the first category of projects, it is the holding capacity which is required to be created. Kindly recall what was done by SUTI in 2000-2001, and ultimately government did not lose money in that. Government came out with flying colors and made a lot of money. So those projects will have to be incubated somewhere where the funding need to be provided in a very innovative way, and as the economy goes up in the upside cycle, these projects will come back. The second category are the projects where the all haircut and everything will have to be done, and sooner they are closed, better it is. It is where the basic problem will arise. Which banker is going to take a call so that he is not questioned by CBI that you have only recovered 20 rupees out of the 100 rupees you lent, and then say who was responsible for this and why should not all of you be arrested. So any banker will say, I am not bothered about it, let it remain like that. And this oversight committee, I am quite afraid, will not be able to look at all the cases. This is not possible humanly.
So, Mr. Mittal, then what's the way out? The oversight committee obviously can't solve the plethora of cases that they are. I mean, 7 lakh crore in NPA is no mean task to achieve. But, you know, how is that decision then going to be made? Because boards clearly are not asking questions of their banks. I mean, boards have independent directors, boards have representations from the RBI. Boards are clearly not asking questions, and which is why bankers are not moving. They're scared to move. They're wary. So where does the solution then lie? What kind of an assurance do you believe will help people arrive at a solution?
See, the question would be, the one is that you have to create an institution, in my view, an institution like SUTI, where you have innovative way of funding it out, putting these assets which are good, and the rest of the assets which are bad, even they are being taken and discounted there and sold off there. So you have a separate group where this committee can have them dealt with using a specialized agencies where the assets are being dealt and disposed of. There is no other way. Or second way is empower the boards of the banks that you are responsible for disposing them off. But the problem would be if there is multi-financing, multi-banks are involved, how do you deal with them? So therefore, it is necessary to aggregate it out, bring all the assets at one place and deal them out. Any other solution will, you were mentioning about SR case, same thing will happen. There will be 10 lenders, 2 will agree, 2 will not, remaining will not agree. So all that will happen when you have multi-banks financing the deal. There are private banks, there are public sector banks, there are NBFCs involved, there is LIC lending. So you have all kind of lending available there, and in some cases there could be foreign lending also. So if you have all that happening, then you have to see that how do you deal it out. And you can only deal with them when you bring under a single organization, take care of them, and these assets which are very good in infrastructure, they will come back after 1 or 2 years. They need to be stored, be sort of housed there, and after some time they will come back because fundamentally they are good projects.
Mr. Bahuguna, I'm going to come to you because you'll have your skin in the game as far as some of these assets to be bought are concerned. Is it going to be so easy? I mean, you know, banks have, yes, begun to provision, and then, of course, they'll be restructuring and haircuts and all of that. But isn't putting the asset away, whether it has to be bought or whether it's a bad bank in some way that Mr. Mittal was referring to, is it all going to be so easy? And are there resources enough for things like a bad bank that have been spoken about in public spaces?
I think the time to act on that concept, a central resolution agency, by whatever name you might want to call it, is definitely now. Because the challenges with dealing with loans spread across many lenders in the banking sector and overseas and otherwise are just too hard to tackle in a defined time frame for banks. And therefore, some sort of aggregation, as Mr. Mittal alluded to, and then putting it out on sale, because frankly, whichever way you look at it, the price, the eventual realization on a net present value would be factored into an offer made by an international investor, for example, a strategic buyer, for example, who would put out the money today to take those assets away. And there are definitely enough instruments that can leave some bit of upside with the banks who let go of assets today. And I certainly think that is something which should be tried and must be tried, because as I mentioned at the onset, it is costing us upwards of 40-50,000 crores every year by prolonging this issue. And an asset which begins to return money after 4 years, but in the interim accumulating further interest, frankly loses value very rapidly. And that is something we must realize. So, you began by talking about the level of leveraging at the Indian company levels. That is only increasing by the day, and that's not making projects any safer. If this, the new government initiative, if it enables banks to do things, perhaps some decisions might be taken, but I'm afraid I'm not sure whether everyone will agree to the same thing at the same time. To take matters forward. So be it through the IBC code, be it through outside the IBC code, I think we have to be less prescriptive. The government must incentivize banks who are cleaning up and cleaning up quickly to give them more capital to stay in business and support investment growth. I think some mechanisms like that perhaps could be tried, and which should find some favor and could be made to work. But I'm afraid the task of even at 50 large accounts, if banks were to try deep restructuring, that is something which I've been hearing of in recent days, it's not a very good thing for the country. It's not a very good thing for the banking industry, simply because you cannot force fit into a shoe size which is three sizes smaller. The fact is, you have to buy a new pair of shoe. You have to throw the old pair away. And in this particular case, you have to resize the balance sheets, move on. And while Mythili said there's enough deposits to lend, but without enough capital backing it, you just don't meet requirements which allow you to lend. And it's extra deposits today, frankly, which is again pulling the system down.
Right. Indeed. Mr. Bahuguna, hold your thoughts there, because Swaminathan Aiyar has an appointment and we've kind of stretched our time because the decision hasn't come. I'm going to take 2-3 direct questions with him before I let him go. And Swami, the discussion that Mythili and I always have in our newsroom is about public versus the private sector banks. And is this a problem restricted to the public sector banks? The answer to that is obviously no. So why is it that the public sector banks are being made out to be, the villains in this entire NPA mess? Because the problem also saddles the private sector, which is at the end of the day so nimble and not answerable to the government.
No, let me put it this way. The private sector banks are partly involved, but it's a very small part of the particular problem that they are facing as far as the bank NPAs are concerned. The private sector banks, they have some problems, but by and large, they are okay. The public sector banks are in extremely, extremely deep problems. And the reason is very, very clear. I remember there was a press conference where I told Arun Jaitley, why don't we just privatize the 10 worst public sector banks? And he said, no, we need the public sector. After all, private sector is reluctant to invest in infrastructure. So I need the public sector bank to invest in infrastructure, making it very, very clear that from the point of view of the finance minister, public sector banks are a nice tool of public funding. Directions are being given. These are not commercial decisions, these are political decisions being taken. Because there is a fundamental problem of how do I fund infrastructure? My fiscal deficit is large. I'm trying to reduce my fiscal deficit. And because I don't have money, let me somehow try and get more money by using the public sector banks. So, so I would say the public sector banks are in a much worse shape than the private sector banks because of political directions. And those political directions are coming out of the fundamental problem of if you're going to build infrastructure and if the private sector prima facie has problems in doing it, where is the government going to get the money to tackle that? So, I mean, most of this discussion has been on the limited problems of the banks. But even if you solve them, then the problem really is going to be what next? In some sense, you need to develop a long-term savings market. I mean, your life insurance, your pension funds, all these guys, they should be providing enough money for most of the financing of infrastructure. The other thing that can be done, Arun Jaitley made a brief reference some years ago. He said, the problem is that when you start a new infrastructure project, there are all kinds of risks. Once it is built, the risk goes down. And yet we have the problem that we are asking the private sector to take on the riskiest part at the beginning. And when the risk is over, then transfer it to the government, which is ridiculous. It is the government has the risk-taking capacity rather than the private sector. So the correct thing is wherever the public sector has built something, taken the initial risk, it should be selling its own public sector plants, public sector roads, public sector power stations should be sold. And the money from there should be used to fund fresh, relatively risky infrastructure projects. There's been some talk of various toll projects and so on being sold. But, the government quailed from the idea of actually selling them. All that they are doing is selling the rights to advanced toll collection, on which you will not be able to gather enough money. You need to be able to get lakhs of crores at this point of time. And for those lakhs of crores, I think what you will need to do is dispose of old infrastructure and take the receipts from that to fund fresh infrastructure, take the burden away from the banks, take the burden away from even the politicians who then have to say, where am I going to get the money for this? So we need a complete rethinking of how do we finance infrastructure. And I think, there is a way. And the way is that the new infrastructure projects being risky, that risk needs to be taken mostly by the public sector. And in order to get the money for those risky investments, let us sell all infrastructure, which the risks have been taken out of it. They are like annuity propositions on which you will get a large number of private sector investors, especially foreign investors. I think that is the way forward.
Right. Swami, just hold your thoughts there because I think infra financing is an issue that I am going to discuss with my panel right here. But if I may ask you, and I'm going to go back to some of the provisions that the cabinet is going to take up. And one such provision is that how do you enable banks? And I think one of the things is that you have a new provision by perhaps changing the Banking Regulation Act to write off bad loans. How does one ensure that some of those issues get sorted out? The one-time settlement, for instance. I know I'm going back to the issues. I'm not really looking forward in this discussion, but I do want to ask you because these are provisions that the Union Cabinet will discover. And then, of course, the final question on penal provisions. One believes that people who've defaulted, let's have penal provisions. That issue gets thrown up every now and then, but not every time has the promoter to be blamed when there is a default happening.
I will just say this limited thing, that when a loan goes bad, both the lender and the borrower are partly at fault and they must share the particular pain. The way politics goes, however, is a separate matter. After a series of scams of various kinds, the political class is terrified of taking fresh decisions which invite all these allegations. That fundamental problem cannot be solved by an oversight committee, by a legislation, by penal things. It's not going to be solved. What you need is credibility to come into the system, that we have politicians who actually take decisions in the public interest and not in order to make money. I mean, that fundamentally is the situation we have to return to, and it cannot be fixed by a piece of legislation here or an oversight committee there. We require a new probity, a new public appreciation that public servants are acting in the public interest.
All right, Swami, I think we'll let you leave because I know you have an appointment to go for, but thank you very much for being with us. Mr. Mittal, I think the point that Swami was making, and I want to take this around the table with both you, Mythili, Mr. Bahuguna and Mr. Joshi here, about infra financing. I mean, you know, getting rid of old infrastructure, using that as an equity for new infrastructure is, I mean, one has spoken about this, that the way infrastructure financing happens in the country, and I think Mythili had made this point earlier, has to completely be overhauled. Is this one of the solutions that can be put on the table?
Yeah, it is very fine to say that, but there are very serious challenges to that. Now, let's take key sectors. Road sector is essentially privatized. Government hardly constructs any new roads except through the different BOT or whatever method we say. Railways is very difficult because we don't have a competition in railways, but there are other methods by which the money is being raised, leasing methods and everything else, so that's being done. But you can always, there is a concept available for private lines, but it does not work, so there is a scope for improving it there. Port sector, you have now a competition between public ports and private ports. You have private ports coming up in a big way at various parts of India. Now, to say that existing ports should be privatized, yes, it's fine, but it is difficult because politically it has implications. And any government of the day also looks at the political feasibility of a good economic idea. Now, if you look at power sector, except NTPC and some state utilities, the power sector plants are coming in through the private sector route, but there is a problem with the distribution, which need to be privatized. That's one area where I think there is almost unanimity to privatize it, so that my losses go down and my generating plants become profitable because they can sell power and the country can grow. So I think if you look at sector by sector, and I mean, take telecom, for example, it's almost 100% privatized. The share of government companies is less than 5% in the revenue. So if you look at these 5 key sectors, you find that there is a lot of role being played by private sector. But the question remains that financing of infrastructure, should that be the role of the banks? Should they be holding that asset on the balance sheet for 20-25 years? That is a question which is not being answered by anybody. I mean, I am saying those who are concerned with it, that is the government and the regulator. So that is where the solution has to come, and that will take away a lot of issues of the banking sector. But Mr. Aiyar said a number of times the political interference. I will beg to differ that having been there on that seat, there is hardly any interference. Whatever is the perception outside, I cannot be commenting on that. But to say that banks are being forced to lend to business enterprise A or B is absolutely not correct. One-off cases I can't say, I can't take a vow for that, but then if that happens above head, we don't know. But it is not something which is very, very rampant, but that's an impression, unfortunately. The problem is where the transparency is being, sort of ensured in allocation of projects. These questions do not arise. So, the moot point would be, how do we allocate these, assign these projects to private sector, and that should be done through competitive method. That is unfortunately the outcome of the coal case and everything else. So having done that, if the projects are being assigned on a competitive basis and the borrowing is done by the banking system on merits, and we put in a system in place where the banks offload these assets after some time, I think we are creating an architecture where a lot of funding will be available, both domestic and foreign. And let me end by saying, lot of mechanisms have been tried to do financing of infrastructure and nothing has succeeded, because that doesn't work. You try to create lot many funds, lot many issues, nothing happened on that.
Mr. Mittal, Mr. Mittal, as I close this, I must ask the panel one last question here. And one of the solutions is that has been spoken about, and I think people in the government have been speaking to us both on and off the record, is that why are we looking at restructuring of particular assets or particular loans or particular projects or particular cases? Because there is an exposure that a very few sectors have in that sense. So why not look at restructuring of a sector as a whole? Is that a pragmatic solution at all to this problem? I mean, is that perhaps an option on the table?
If you ask me, I'll agree with that. What Mr. Bahuguna said, I fully agree. Take top 50, top 100 cases, sector by sector, and deal with them. It will be much easier, because many times you have some sectoral issues also involved, which are regulatory issues which need to be addressed. So that is a very perfectly good idea. Take the sectors where the largest NPAs and which our 80-20 principle, where 20% cases will cover 80% NPAs, deal with them out, and then you take the next cases, and that's the way to take care of them. So that, in my view, that's a very workable idea.
Mythili, you agree with this? Instead of going project by project or instead by going on a case by case basis, why not pick up sectors and have a restructuring of sectors as a whole?
That is a better solution than what we're thinking of at the moment. So perhaps it is the least bad solution, and actually the solution that Mr. Mittal suggested of SUTI, that would be a good example to follow, because both in the case of the US and many other countries, the US made more money out of TARP. So it was a temporary warehousing of the bad loans, and that could help. But the problem in India is that very often we try to reinvent the wheel, because not just in the case of SUTI, but we also have the excellent example of how UTI Bank was transformed into Axis Bank. That experiment is there, it has worked reasonably successfully. So why don't we do that with other public sector banks? Otherwise, we'll be exactly in the same situation, Supriya. I might not be here, but I assure you, you will be here 5 years down the line discussing exactly the same thing.
Sure, I'm going to be here too discussing that 5 years down the line. But Mr. Bahuguna, one of the things that you suggested, that let's pick up the top 50, top 100 cases, look at specific sectors that have been a part of this bigger problem and solve it like that. Our panel here believes that that is perhaps a more pragmatic way to go forward. And besides, of course, the one suggestion that was made, like a SUTI-like structure that Mr. Mittal spoke about.
Yeah, Supriya, I mean, while we look at it, I just want to clarify, you can't ignore the company-specific issues. So it's not as if you will need to, overlook that and do something cosmetic at the top. I think it has to be deep down as well. But I think, it gives you scale in terms of analysis, in terms of decision-making, in terms of positions, in terms of how much risk you want to take on. And how do you position debt and equity and components like that. It just makes it more easier. It gives you size, and you can build expertise to monitor it and then offload it as and when the opportunities arise. And perhaps through one central agency, if you can pool it all together, get international investors interested in it, I think that could really sort of put some teeth behind this effort. Otherwise, this would go on to be a very, very slow and painful process for a very long time.
Mr. Joshi, let you have a quick last word on this, and that has to be on penal provisions. A lot of people out there believe, and because of cases that are perhaps in top of the mind in the public domain, and a KFA-like case, that increase the penal provisions. Is that a part of the solution at all, according to you? Because the other argument to that is that corporates alone cannot be blamed for loans that do turn into bad assets.
Judiciary and the penal provisions can never be part of the solution. In fact, having excessive fallback on penal provisions and running to courts at the drop of a hat is the exact problem, at least for long-term projects or high capital projects. And if a legislation is needed, it is really required to restructure how infrastructure projects are implemented from the development stage till their actual construction and operation maintenance, and limiting the extent of judicial intervention, because courts really are not capable of understanding long-term contracts, or even the sad part is it's now moving towards even going into the question of whether sanctity of contract is something which the Indian judiciary even considers. Or is it always just becoming a PIL court and overpowering the exact commercial or contractual framework that is the basis of any long-term financing?
All right. On that note, completely out of time on this very special show. The Union Cabinet still has to take that call, but thank you very much for joining us. Swaminathan Aiyar, Mythili, Bhusnurmath, Mr. Bahuguna, Mr. D.K. Mittal, and of course, Mr. Piyush Joshi. Thanks very much for being with us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.